Greetings, traders from all around the world. Chris here, bringing you another featured article presentation. This time, we're going to be diving into the Ichimoku Kinko Hyo. The Ichimoku Kinko Hyo is going to be a technical analysis indicator, so those of you that favor these type of presentations, you're in for a treat today. Now, without further ado, let's dive on into it. I hope everybody's doing well today, and after our presentation, the goal is for you to know a little bit more about the Ichimoku Kinko Hyo and maybe have a newfound interest in this very useful technical analysis tool. Now, the Ichimoku Kinko Hyo is also known as the Ichimoku Cloud, and that is what we'll be referring to it. That or the Ichi is what you're going to hear me say as we go forward from this point forward. You'll hear a lot of traders say the Ichi or the Ichimoku Cloud, but I'm going to be probably referring it to the Ichi or the Ichimoku Cloud, but nonetheless, onward we go. So the Ichimoku Cloud is a combined collection of popular and flexible technical analysis indicators that is used by traders all over the world, and it attempts to show support and resistance levels, momentum, as well as trend direction. So it gives us an awful lot of information about what's going on in the market using historical data. The Ichimoku Cloud was developed by a Japanese journalist named Goichi Hosada, and guys, I am terrible with name pronunciation, so don't beat me up too bad on that one. And it was published in the late 1960s, so it has been around for quite a long time. By technical analysis indicator standards, this is one of the older ones, but it is a lot of the older ones that are still around today that are around for a reason. Now, the idea is it provides more data points than the standard candlestick chart, which obviously is what most of us are using out there in the technical analysis world to display our price action. The how. The Ichi, there's that abbreviation I warned you I might be using. The Ichi takes multiple averages from an asset and plots them on the chart. It then uses these figures to compute a cloud which attempts to forecast where the price may find support or resistance in the future. The Ichimoku Cloud is composed of 5 lines or calculations, 2 of which compose a cloud where the difference between the 2 lines is shaded in. So the cloud is calculated with the difference between the 2 lines and then just simply shaded in. And just so everyone is aware, at the end of the presentation, I will be showing you a live example of what the Ichimoku Cloud looks like for those of you that are unfamiliar, so you don't have to try to get too creative in your head. I will show it to you. The lines include a 9-period average, a 26-period average, and an average of those 2 averages, a 52-period average, and a lagging closing price line. So there is a lot going on there. Once again, that's a 9-period average, a 26-period average, an average of those 2 averages, a 52-period average, and a lagging closing price line. But once again, guys, don't be scared. We will understand what all of this means at the end, and we will do this together. Now, the cloud is a key part of the indicator. When price is below the cloud, the trend is down. When price is above the cloud, the trend is up. So above the cloud, up. Below the cloud, down. Pretty easy way to remember that one. Now let's talk about those 5 lines that are making up what the Ichimoku Cloud is and where those calculations are coming from. So the conversion line, we'll start with that. The conversion line, the real name of the conversion line is known as the Tenkan-san. Okay, the baseline, once again, my pronunciations are always very rough. Please bear with me. The baseline is known as the Kijun-sen. The leading span A is going to be our Senkou span A. The leading span B is going to be known as our Senkou span B, so simple there. And our lagging span is going to be our Chikou span. All right, nothing too crazy there. And once again, the name pronunciation for me is the hardest part about trading, oddly enough. Moving along. Now we're going to look at some abbreviations, and this is actually relevant because on the next slide I will actually be showing you the formula of how the indicator is plotted, and this is important because I never like using anything myself unless I understand where it is coming from. It's important to know where it's coming from because it allows us to do a better job of interpreting the information in a way that is actually useful to our brain. So the period high is going to be simply abbreviated as PH. The period low is going to be abbreviated as PL. The conversion line is going to be abbreviated as CL. So PH, PL, and CL. Now let's dive into the math of all of it, right? And you don't have to be too crazy into math. You don't need to know a ton of calculus to be able to figure this one out, if at all any, so don't worry. Now, the conversion line. This is going to be equal to 9 minus the period high plus the period low divided by 2, okay? So once again, that is 9 minus the period high plus the period low divided by 2. So don't get confused by my stuttering. It is just 9 minus the period high plus the period low, all divided by 2. Okay? Our baseline is going to be 26 minus the period high plus 26 minus the period low, all divided by 2. Okay, once again, that is 26 minus the period high plus 26 minus the period low, all divided by 2. Leading span A is going to be the closing line, obviously, or I should say our conversion line, plus the baseline divided by 2. Once again, that is the conversion line plus the baseline divided by 2. The leading span B is going to be calculated with 52 minus the period high plus 52 minus the period low divided by 2. The lagging span is going to be plotted 26 period closes in the past. Okay, so lagging span will be 26 period closes in the past plotted. Now come the rules. The rules are going to be how the indicator is coming up with the display that we're seeing after doing the math that we just discussed. Now, the rules for this, we're going to calculate the conversion line and the baseline. Okay, we're going to calculate the conversion line and the baseline. Then we're going to calculate leading span A based on the prior calculations. Once calculated, this data point is plotted 26 periods in the future. Next, we're going to calculate leading span B. We're going to plot this data 26 periods into the future. Okay, everyone following along? And once again, guys, if I am going too fast for your notes, the beautiful part is just remember to rewind the video. For step 4, for the lagging span, plot the closing price 26 periods in the past on the chart. For step 5, the difference between span A and span B is colored in to create the cloud. So essentially what we have, the difference between span A and span B is going to be shaded in, and our indicator will do this automatically for us. But if we didn't have an indicator, once again, it's important to know how. This is how we would do it. We would shade in the difference between span A and span B. And for step 6, when leading span A is above leading span B, we're going to color the cloud green. Okay, this is going to be our bullish portion of the Ichimoku read. When leading span A is below leading span B, we're going to color the cloud red. All right, so a two-parter in step 6. Moving along. Now, when we put all of this together, all of the steps will create one data point. To create the lines, as each period comes to an end, we're going to go through the steps again and recreate all steps 1 through 6 there to create new data points for that period. After we're done, we'll connect the data points to each other to create the lines and the cloud appearance. But once again, guys, don't overly stress this portion too much if you're getting stuck up on it, because once again, indicators are already out there. The Ichimoku is already done for us. So a lot of this is going to be just information so we understand how it's working, but not required of us to make it work. Now, what in the world does it all mean? The overall trend is up when price is above the cloud, that is our bullish scenario. It is down when price is below the cloud, and it is trendless or transitioning when price is in the cloud. When leading span A is rising and above leading span B, this helps confirm the uptrend, and space between the lines is typically colored green on most indicator platforms out there. Actually, I don't really know of any where it's colored anything but green in this scenario. But it is important to understand why it would be colored green to mark off the bullish scenario. Now, when leading span A is falling and it's below span B, this helps confirm the downtrend. And this space is generally colored red. Once again, I've never seen it colored any other color than some version of red to indicate the bearish nature of this scenario. Continuing along, traders often use the cloud as an area of support and resistance depending on the relative location of price. The cloud provides support and resistance levels that can be projected into the future, and that's one of the interesting aspects about the Ichimoku cloud is the fact that it does provide plotted points in the future to be on the lookout for potential future areas of support and resistance despite gathering its information from the past. Now, this is one of those things that sets Ichimoku Cloud apart from other technical analysis indicators because we don't see a lot of indicators that attempt to do this. Ichimoku is one of the bolder ones in this category. Now, it is even better when paired. When we use the Ichimoku with other things, we often find more accurate results, but once again, not required, but it does help filter out some of the gibberish along the way. So the Ichimoku cloud is commonly paired with oscillators such as the RSI, which easily, hands down, folks, is the most common indicator that you will see traders pairing with the Ichimoku cloud out there. Once again, the RSI stands for Relative Strength Index, and this helps confirm momentum and trend direction alongside the Ichimoku cloud. It is also important to keep an eye on the bigger picture when using the Ichi, so as not to get a false read from being too zoomed in on just the indicator itself, which can be easy to do. All of us, I know, are guilty of that at some point or another, where we got too zoomed in to a particular strategy or an indicator that we were using and missed something that was plain as day in the simple price action. We want to avoid this, and adding an RSI or making sure that we're paying attention to the bigger picture of price action in and of itself can help alleviate or avoid this. Now, during a strong uptrend, the price might push into the cloud or slightly below it before falling again, and vice versa with a strong downtrend. And that would be one of the scenarios where we could get caught off guard by being a little bit too zoomed in. Now, the most common strategy that I see traders using with the Ichimoku cloud is based around the crossover strategy, and this is a strategy that traders have been using to attempt to pull profits from the market for a very long time. Obviously, how successful you are with this is going to be based upon how comfortable you are with the Ichimoku cloud, so I always encourage everybody to begin their practice with new technical analysis indicators on demo accounts before they take it to their live account. So many traders use the Ichimoku cloud to provide these crossover signals, and this is done by watching for the conversion line to move above or below the baseline. So we're watching for the cross between the conversion line and the baseline, okay? For a buy, traders will wait for the conversion line to cross above the baseline. So buys will be when the conversion line crosses above the baseline. Now, the signal is strengthened when price is also above the cloud. For a sell, traders will wait for the conversion line to cross below the baseline. The signal is also stronger, of course, when it is below the cloud. So once again, our buy scenario will be when our conversion line is crossing above our baseline, or I should say our potential buy scenario. That's going to be when our conversion line crosses above the baseline, and the signal is also going to be considered stronger when price is above the cloud. For the sell, when we're waiting for the conversion line to cross above the baseline, the signal is also considered stronger when indeed price is below the cloud, because once again we are anticipating a drop in that scenario. That is a bearish outlook on the market. Now, it's always important to talk about some potential drawbacks just so we are aware. The Ichi is a very, very busy indicator. This means there are more lines and colors covering our charts, which can lead to missing something important in the price action world that traders can easily get distracted from once their chart's getting cluttered. All of us have been there where we had too much stuff going on. We were trying to find the holy grail, and unfortunately, by having so much information, we got information overload and we couldn't see something simple behind the scenes. That is something to be on the lookout, because Ichimoku by itself, with no other indicators added to it, no other moving averages, is a very busy looking indicator indeed. The data from the cloud is all historical, so that's worth mentioning as well. So there is no guarantee of future function of plotted levels, but once again, is anything in traded guarantee? Absolutely not. We are the masters of percentages, not guarantees. During certain conditions, prices might stay way above or below the cloud, and this also makes the indicator irrelevant during that time, because once again there's no interaction with the indicator if it is well above or well below. So those are just some things that we need to be aware of, obviously, as we go forward with the Ichimoku. Now it is time to get at it. And what does that mean? It means it's time for us to use the indicator, practice with the indicator, and all that good stuff. Now, the majority of that I'm going to leave for you guys to do to yourself, but I am going to quickly switch on over to our Finamark platform and show you how to apply the indicator and show you what it looks like. So here we're taking a look at a 15-minute chart of the E-mini S&P 500 on the Finamark platform, which all of you, I'm sure, are familiar with at this point. Now, to add the indicator, to add the Ichimoku Kinko Hyo, all we're going to do is come up here to the Indicator Options button, give that a click, and because the Ichimoku Kinko Hyo in nature is something that overlays price, it's going to be displayed right here. We don't need to add any other sections. All we need to do is scroll down, see this Ichimoku button right here. It's just going to say just Ichimoku. We're going to click that once, and automatically you're going to see it in the background there. And I'm going to go ahead and click Hide Indicators to return us to the chart. And now that we've done that, you guys can see this crazy cloud that previously, if you'd seen it, you might have been scared. But let's break down exactly what we're looking at. Obviously, as we're taking a peek here, we have a red area that's shaded in, and we have a green area that's shaded in. We know that universally green is usually our bullish scenario and red is usually our bearish scenario. But if we ever forget what it is we're looking at, remember, all we have to do is pull that indicator options section up again. Go ahead and click on the cog wheel, just in case you don't remember everything we just went over, and it's all displayed for you right here. You see your Senkou A, your Senkou B, your Tenkan-san, your Kijun-san, and your Chikou span. So you've got all of these right here, and you can actually change the color of these if you so choose. I am not going to do that because I actually like the colors that I have it set to at the moment. And you can also see the periods. You have your 9 period for your Tenkan-san, obviously. You have your 26 period for your Kijun. You have your 52 for your Senkou span B, and then your 26 again for your span over your Chikou. And once again, we can adjust all these things if we so choose, but for today's purposes, we're not going to do that. We're just going to flip back on over here. And once again, we're going to look for an example of when the Tenkan crosses above the Kijun for the conversion strategy. So let's go ahead and see if that has happened over here at any point during these more recent live charts. So once again, we're looking for our blue line to cross above our gold line in the most simplistic sense, and we would consider the signal to be stronger if it is crossing above it while also being above the green cloud, or being at and in the green cloud, either or. Both of those are widely considered to be bullish scenarios. Now, this is an example over here where it's a little bit hard for you guys probably to see, but we actually had our blue line cross above our gold line, and it did happen above the green scenario. It was followed by some pretty heavy buying action, but at this point we are looking at a 15-minute chart, so we're going to see things muddled up a little bit. But if we were to reverse the scenario, we would want to see, for a sell scenario, we would want to see our blue line cross below our gold line, all below the cloud. And we actually had this happen over here, and as you can see, there was a lot of bearish activity there that followed. But overall, folks, the Ichimoku cloud is something that definitely provides some valuable information, and I strongly encourage that you play with it now that you know what it is. It is something that can definitely add some power to your trading arsenal. But in the meantime, until the next one, folks, thank you for joining me again on this wonderful featured article presentation on the Ichimoku Kinko Hyo. Cheers, everybody, and happy trading.